Hello, hi there. Thank you for joining us on Traders Talk this week. I'm very excited, as usual, to be able to present to you this week's Traders Talk topic. And it will be good if more people would be able to see this, and if you have friends who are interested to learn about trading, learn about life, learn about financial literacy, this is the right show and the right time for you to be in. And we'll share today some great experiences which I have in my life, and also share with you some great tips in how to actually manage your money. Yeah. Okay, great. I will just start off, and today's topic is opportunity cost that can haunt you for life. Okay, opportunity cost that can haunt you for life. Basically, what this means is, of course, firstly you have to understand what is opportunity cost. For those who know what is opportunity cost, maybe you can put one, and for those who do not know what is an opportunity cost, maybe you put number two. And of course, for those people who are in the finance or financial line, who have studied a bit of when did I learn opportunity cost in my university? Is it a finance? I think it's a finance. I think it's a finance subject, and basically opportunity costs arise because of um, uh, us having limited resources, and of course, because of these limited resources, we cannot do everything we want, or we cannot have everything we want. So it's actually choosing between one one thing or the second thing. So it's either for example, uh, a very simple opportunity cost is that either you eat an apple or an orange. If you eat an apple, because you can only eat one, you can only eat one. So if you eat an apple, then you cannot eat an orange. So what is the opportunity cost to you? The orange is actually your opportunity cost to you. Yeah. So that is actually a very layman's explanation. What is opportunity cost? And very common is, of course, these opportunity costs arise either as a result of money, time, or decision. The earlier example which I actually gave you is actually because of a decision which you have made. Then of course you cannot enjoy the orange because you wanted to have the apple. And in finance term, basically we use this opportunity cost a lot. Yeah, because you have limited resources, or if you have limited money, you can either take the money to buy a car, for example. So once you buy a car, then of course you cannot you if you don't have enough resources, which means that you don't have enough money, then of course you cannot buy a house, for example. So that is actually opportunity cost in terms of finance, or even if it can be time. If you want to actually spend time, or if you spend time at work, for example, of course, what is the opportunity cost? You cannot spend more time with your family. Yeah, so that is your opportunity cost. You go to work to earn an income, but you cannot use the same time to actually spend with your family. So by not able to spend time with your family, you are having this opportunity cost for you. So basically, we always weigh which one is actually beneficial for us, whether it is this or this, or which one you prefer lah. So basically, this is what it is, maybe in terms of money, time, or decision, which I have actually explained. And I remember one very clear example is when I actually went to the university. When I actually went to the university, um, I have this motorbike. Yeah, I have this motorbike, and you can see. Let me show you the thing. Okay, so you can see that when I went to university, I was actually taking on a motorbike. This is actually a Honda C70. If you look at this picture, it's actually a Honda C70. And why this Honda C70 is very sentimental to me is because I studied in the local university in University Kebangsaan, which is basically about 25 to 30 km from my house. So at that time, I stayed at the hostel. I stayed at the hostel during my university days, and after about one semester, then my father said, why don't I get you a bike so that you can actually move around the university. uh, and of course, I mean, at that time, he so-called imported this motorbike all the way back from Ipoh. I think it was my uncle's motorbike. There was actually a spare one in Ipoh, so he imported this motorbike home, and give to me to ride in the university lah. At that time, I don't even have a license. I don't even have a license on for this motorbike. And in fact, up to today, I don't even have a motorbike license. But I have rode the motorbike all my 3.5 years in university, and I only have an L license. I remember I only had an L license, and every 3 months I had to go to the post office to renew my L license every 3 months. I did not manage to take my license, my motorbike license. So it was riding a motorbike in university with an L license, but a lot of times I was actually fetching people moving around illegally. You see. So I did that for about 3.5 years. So I remember very clearly at one weekend. What happened was there was actually this seminar, and during the university times, I was also a bit I would say ambitious. I would say I was a bit ambitious during university time. So I wanted to learn how to make money. So what I did was I joined a multi-level marketing company. Okay, and of course, during those times at the university, you besides studying, hanging out with your friends, money is always a problem. Is it? I mean, we don't have so much money to spend, so we were always looking for ways to actually make money. So I decided, okay, why don't I join a multi-level marketing company, and that is where I started to expose myself to a lot of things, from reading books, going to motivational seminars, learning how to sell and all these things, which of course helped me a lot subsequent to that, because these techniques which they teach you are basically evergreen, where you can basically use it anywhere in your work, or even right now I'm still having these kind of skills embedded in me. So there was one weekend I went to a seminar. Yeah, so I attended the seminar, and after the seminar finished about 11, 12 o'clock, then I went to take my motorbike home. Okay, so I stayed in Puchong at that time, and then I was the seminar was actually in the mines. So I went to the car park. I took my motorbike and wanted to start the motorbike. And this C70 is not a new one. It's actually a 7 or 8 year old car bike. So I started to kickstart the bike. I kickstart the bike. I kickstart the bike. It didn't start. It didn't start. So I was like, oh gosh, it's such a bad time to break down, and it's already 12 plus. There was actually those people who attended the seminar all drove cars, and a lot of them drive nice cars. I was probably one of the few who went to this seminar on a motorbike. So I couldn't start a bike. So I was thinking, what can I do? So I walked out the mines, and then I was searching around at 12 o'clock midnight. I was searching around to find a payphone. I was searching for a payphone, and at that time we don't have handphones. You see, we don't have handphones, so we were still using payphones. So I took the payphone. I found a payphone. I have some coins, so I actually called. I couldn't call. I didn't call my father because if I if I told my father I went for a multi-level marketing what is that seminar instead of being in university, so I think I will get some problems. So he didn't know that. He thought I was studying in university, you see. So I called my girlfriend at that time, which is my wife now. So I called her. I said, I can't start my motorbike. I'm actually stuck. I'm actually stuck. And can you come and fetch me? I said, can you come and fetch me? So so she said, I would love to come and fetch you, but it is already 12 o'clock. My mom has already locked all the doors, and it's not possible for me to go out. If I go out, then she would kill me, you see. So I mean, you know, her mom is quite strict type, quite strict type. And as a girl, you can't drive. She drives a car. I drive a motorbike, so she drive a Concho at that time. So she said she can't. Then she said, why don't you do something with your bike, you try, and then maybe if cannot, then maybe tomorrow I come and fetch you. So I was like, what can I do? I can't start my bike, and it's already 12 plus midnight. I don't have money to take a cab. I don't have money to even go to a hotel. I'm a student. Remember, I'm a student. So what I did was, I walk around. I was actually practically walking around at the Mines Convention Center, and I was at the lobby of the Mines Convention Center, and I think I saw about 3 or 4 big pillars there. If you go to Mines Convention Center at the entrance, you will see round pillars, 3 or 4 of them. So I looked at the pillars, and I saw the pillar had this big huge slab, you see, a raised slab, and then I climbed up the slab. I climbed up the slab, and I slept there. I slept there. I slept there for the night. I slept there for the night, and of course, there was nobody, no security guard or nobody there. So I slept there for the whole night, and up till the morning when people actually started to come, then I hid myself. I hid myself. I didn't want people to see me, um, um, sleeping at the pillar. So then I went to the washroom and clean myself, and then I continued the seminar. And then of course, after the seminar, I pushed my bike to the shop. I pushed my bike to the shop nearby, and I left the bike there to fix. And I called my girlfriend, and she came and fetched me the next day. And of course, subsequent to that, I was still riding a bike when I first started to work. And and the first job which I got was actually in Price Waterhouse as an auditor. So I graduated from an accounting degree, and then I started the first job. Actually, even before I got the certificate, I was already hired Pricewaterhouse back then. Now they merged, and now it's called PricewaterhouseCoopers. It was one of the big four audit firm at that point in time. So I joined Pricewaterhouse, and I was still riding that C70 bike for quite some months. You see, I think about 5 or 6 months I was still riding this bike, and the bike again always gave me this kind of problems where sometimes when I wanted to go to work, the bike stalled, and when I moved too far, the bike overheat, and then the chain was too hot, and the chain start to detangle. The chain start to detangle because the bike was too hot. So the chain detangle, and then you will start at the road, and then you have to actually fix this bike. And a lot of times I went to my client's place. I remember, especially the client's place where they had a parking lot just in front of their office. So most of the time I park very far away. I park my bike very far away because this is a very old bike. And I remember at Pricewaterhouse there was only a few of us, me and a few of my colleagues, which were riding a bike. And of course, most of them ride nicer bikes than me. So mine is already the worst one. So again, after a few months working, then I thought to myself, this cannot be the way, and I think I need to actually buy a new bike with 1,006 salary, which is not much at that point in time. So then I decided, okay, let's just buy a new bike, and let's just go to the shop and see. I've saved a bit of money lah. I mean, after 3 or 4 or 5 months, I think on the 6th month, I think I bought a bike. Then I went to the shop. It's at Sentul. I still remember this shop called Wilaya Motor in Sentul. So I went to the shop. I looked for some bikes, and then I asked how much is all this. Then I decided, okay, let's buy this bike. I think it was about $3,500. I paid 350 of down payment, and then the rest I actually took a loan from that credit company. They also had a credit company, so I took a loan. And then I bought a Honda also, a C110 Wave, So I bought this bike, and of course, after I bought this bike, I had to pay the installment, which is basically about $110 plus the petrol and all. So basically, I was spending about 130 or 140 a month on this. But of course, this bike gave me a reliable ride. I no longer had to stop my bike because the bike was too hot, and I don't need to fix the chain. I don't need to call my girlfriend in the middle of the night to come and fetch me. So this bike, of course, gave me the reliability, to actually commute. And of course, what I lost, of course, was the money which I need to pay for this. I couldn't spend on going for movies or having some small holidays or some foods or cinema. So I had less to spend in terms of entertainment at that time. So of course, this to me at that point in time, while I first started working, is actually an opportunity cost for me. Yeah. So this, although small, I mean, is also an opportunity cost for me. So basically, I had to give up something to get a more reliable and more comfortable ride. Of course, as I progress through my career, basically the things are more or less the same. After I worked for a year plus, I started to bought a car, and that was Proton Iswara at that time, a manual Proton Iswara 1.3S. So I bought a car after a year plus working. I think after I was promoted, I got $200 increment. From 1,006, I got $200 increment, and I said, okay, let's now. I don't want to ride a motorbike. I am already a more. I was still an audit assistant back then, but I was more senior. I was already more than 1 year in the firm. So I do not want the girls to actually see me riding a motorbike. So I said, okay, let's get a car. So I got a car, and because my salary was also so low at that point in time, I took a 7 years loan. I took a 7 years loan, and I think I paid how much? I think I paid about 600 over dollars. I think about 500 or 600 over dollars for that car for a 7 year loan. Then of course, while I progressed again, the same thing. While I was working in the bank, I again wanted to have a more comfort, better ride. I I bought myself the Honda Civic. Honda Civic just had a facelift to the seventh generation, if not wrong. So it was very nice. And then I bought a Honda Civic. I bought a Honda Civic while I was working in the bank. Again, of course, I spent more to pay for the installments, and I had to give up some other things that I have less to spend because I had less to spend with. And again, of course, after I moved out from the bank again, I again upgraded my car. You know, guys like all these things. You know, they always like to upgrade their vehicles. Yeah, from from a motorbike now to a vehicle. So while I was out, I moved out of bank. I went to the commercial sector. Then I actually started to get more better European cars, which is the ultimate driving machines. I like the ultimate driving machines. So subsequent to that, all my cars were ultimate driving machines, and of course that would cost more lah. Yeah, but of course you it's more luxurious, you more comfort, it's more safe and all this. So you give up the things that you cannot use the money for, but of course you get other things. So that was some opportunity cost which I gave up by not having so much cash to do other things. But I enjoyed driving, and I was quite comfortable with all my cars subsequent to that. So basically, this is some of the story which relates to my motorbike, and the opportunity cost which arose as a result that I choose to have this motorbike, and then subsequent all the cars that I have to actually give up something. Yeah. So these are some of the opportunity costs which I had experience in my life. Yeah. So again, what is the relevance of this? What is the relevance of this to you guys? You know, the other thing is, of course, uh, when where in terms of financial, some opportunity costs which you don't, if you don't manage it well, if you don't manage certain things well, especially in terms of your finance, the result would actually haunt you for life. Haunt you for life. Why I say this is because uh, while I was actually working or going through my career, I really focused a lot in terms of my work, and being an accountant, we are always very careful about money. We are always very careful about money. We manage very well money, but the problem is this: we manage other people's money better than your own money. That is the worst problem that an accountant can have, because he can do a very good job managing the company's money and the company's financial, but they are very bad in managing their own. And if there are any accountants out there which is listening, can you tell me if you agree with that? Can you tell me if you agree that accountants are the worst people to manage their own money and the best people to manage the company's money? So that was me. So I was managing the company's financial, and I was actually doing a good job. I got promoted to a very senior level. In fact, I'm one of the key management in the company. So while doing all that, I did not really manage my finance. And up to a point when I actually started to turn 40, when I actually started to turn 40, I realized that uh, that at that point I already have two kids. I already have two kids. The eldest, when I turned 40, the eldest was already five, and the youngest is three. So there was these two kids there, yeah, growing. My wife, and then we had a house. We had bought a house and all. So 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 when you turn 40, I don't know about you. I don't know about you, but for me, when I turned 40, something something inside triggered. Something inside triggered because I was looking at what I was doing. I was just looking at what I was doing, and then I was looking at what I was earning. Yeah, I was looking at what I was earning, and I was also looking at what I was saving for the past 10 years. I was also looking at what I was saving for the past 10 years. And I realized that I did not really save a lot of money for the past 10 years. In fact, most of the money which I earn, I spent. Most of the money I earn, I spent. And why was not that I earn a very low income, is it? I mean, my income from the time where I worked in the audit firm in Price Waterhouse to where I was at 40, it was many times. It was many times, more than 10 or 20 times. Yeah. So so although I was earning a lot, then I noticed that I did not save a lot of money, and at the end of the day, I was like looking at my so-called as so-called assets or liability, more liabilities than assets lah. For sure, more liabilities than assets. Then I was looking at my bank account and savings, and I thought, look, I'm already 40, and I can only work another 15 or 20 years before I retire, and the kids are growing. And what kind of expenses which your kids will need to use eventually when they start to go to school and all these kind of things. So it triggered me that I was in a very deep problem when I actually turned 40. I was in a very deep financial problem because I was so good in managing the company's money. I practically neglected to manage my own money. Yeah. So I was not doing anything. I was just putting my money, the small savings which I had in the bank. Sometimes I don't even put it in the fixed deposits. Uh, and some of the cash I park it aside to put it in the housing loan account to offset some interest. So this was what I was doing. This was what I was doing, and then I was a bit stressed out, and I think this is what we call what I call a midlife crisis. I was really in a midlife crisis at that point in time, which really stressed me out when I look at my financial situation and where I will be in the next 5 to 10 years time. You see, then of course uh, I was actually doing all the wrong things. I was actually doing all the wrong things. I was not putting my money into good use to invest or to actually generate more money or more income. So then I started to actually look at what options I have. I was still working. Like many of you, you guys are working. Then I was looking at what options do I have? What can I do? Can I start a business? Can I start to sell something? Can I do this? Can I do that? So I was actually looking at all these kind of things, and then it came to me that, okay, why don't I take up a skill? Why don't I take up the skill? Because you remember, I don't have a lot of money. I don't have a lot of money, and whatever I had was already with the bank, placed with the bank because I owe the bank money. So I said, why don't I take up a skill? and what kind of skill can I take up that can generate money. Okay, that's where I started to learn and get myself interested in trading, and I started to learn how to trade because I always see in YouTube and all this that you can make how many $100 trading, and I think at that time the most popular trading was actually trading of forex trading of forex. So I started to look at YouTube and all this. Then I started to learn. I started to follow a few people on Facebook and on YouTube and see what they do and how they do it. So so I was learning all this trading, and I started with forex. And then one day I started to open up an account in a broker, in an Australian broker called Pepperstone. Okay, Pepperstone. And 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 um, and I started trading then. I started trading, and then I traded. I think I put 1,000 US dollar in that account. I wired 1,000 US dollar. I opened up a trading account. Then I started trading, and I think the first time I traded forex was during my holiday in UK. I think it was in UK. Yeah, it was in UK. So I was like learning from YouTube, and then I started to trade. And then during the holiday time, on the phone, on the mobile phone, so I downloaded this MT4 program, and I started to trade using the phone during my holiday. And it was like, wow, I just earned the 200. The first trade, I think I earned about 200 over US dollar. 200 over US dollar. I said, wow, I earned 200 over US dollar. Today, everybody can eat more. No need to eat McDonald's. We can eat more luxurious food because because I earned 280 US dollar on the trade. So that was my first experience trading forex. And of course, subsequent to that, things did not went that well lah. Because I was learning it from YouTube, right? I mean, if you learn from YouTube, I mean, how well can it go? Is it? So then, of course, that didn't deter me from trying to learn trading. And of course, subsequent to that, fast forward, I started to uh, to learn from proper teachers, proper coaches. So I started to learn from proper coaches to trade forex. Then I started to upgrade myself. I started to learn to trade, invest in stocks. I started to learn how to invest in stocks. And then subsequent, I started to learn how to day trade stocks. I started to learn how to day trade stocks. Then after that, I started to learn how to trade options. Trade options. That means the stock options. And then I also started to continue to develop my skills in trading. I also learned price action, basically to just look at the basic charts and figure out what is happening within the stock. Yeah, not even using any indicators lah, just by the bare bar chart. So I was actually honing all my skills doing this. And of course, uh, I would say today I earn quite okay trading the stock market, and I'm basically doing this more on using options. And of course, whatever I earn, then I can actually put it to invest to get lower returns. I mean, investment basically the returns are a bit lower than trading, because trading we basically expect a higher return. So that was me going on to actually do all this. And why I'm actually sharing this with you is because remember I was saying that I was mismanaging my finance, and I wanted to look for to do something which can actually rectify what I have actually not done properly for the past 10 to 15 years. For the past 10 to 15 years, it is, of course, to me, although it is late, but it is still okay, because I think now I'm only mid 40s, right? So basically, when I started this, of course, now I still have a lot of time to continue to actually generate wealth. You see, as long as you start, it is never too late for anybody to start. And one thing which I also want to do right now is to also rectify other problems which I have. Like I'm starting to actually rectify a lot of financial mistakes which I made one by one, after I have basically so-called understood how basically trading can free you financially, and how you can actually use this skill to actually improve your financial wealth, and basically improve eventually. I mean, basically is to improve your future and your family's future, you see, to give more security on that. So then, what I wanted to move on here right now is actually to start off another challenge. Last year during the pandemic, I already did one challenge. That challenge was actually to actually what I did was actually did a test portfolio at that point in time. If you follow my traders talk, the previous traders talk, I have also gone through some things on that. You can actually check it out and look at it. So what I did 1 year ago was actually I started to use one type of trading strategy. I use one type of trading strategy to help me generate monthly income. I just use one particular options trading strategy to help me generate consistent income monthly. Why I did that challenge, that why I did that earlier was because uh, my wife wanted to send the kids to change their school to private school. So when she wanted to change to private school, of course, for those people who go to private school, you know that it is not cheap. It is not cheap. So she wanted to send them to private school, and then of course school fees is again one thing for you to do, and basically this is actually a commitment, you see. So this was a commitment that once you send them to private school, the eldest went there when she was standard four, 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 no, five, standard five. So when she was standard five, she went into private school, and of course you have to cater not only for 1 year fees, you have to cater for the next 6 or 7 years fees in a private school environment. So that was like again, being an accountant, it was like counting uh, 7 times by whatever fee, then how much you need. So basically, I was like, oh, I need to spend in the next few years for one person at least three, or I think it was 300, 200 something to 300,000. So for one kid only doing primary and secondary, you need to spend about 300,000 ringgit, 300,000 ringgit. Yeah. And of course, for me, it's like comparing to my school fees plus my university fees. I think even if I do it 60 times, 60, 60 times, I would not spend 300,000, you see. So I was computing the return on investment. Being an accountant, I was counting return on investment when they go out, how much can they earn? And basically, I say, whatever I spend is going to be sunk. I will not be able to, or the children would not be able to recover their education fees using a conventional way. So I said, I do not want to spend money. I do not want to spend money on their school fees. I thought to myself, I do not want to spend money on their school fees. So, so I said, okay, I'm going to set up a portfolio. I'm going to set up a portfolio, and I want that portfolio to generate income for the next 10 years that they are in the what is that, in the school. From that portfolio itself, it will suffice for the next 10 years for them to finish their education only with this portfolio. So what I did was I set up this portfolio, and I started to trade with one particular strategy, and basically now the school fees are basically paid off with this portfolio, only with this portfolio, without fail, monthly, yeah. And in fact, within when I, of course, before that I was using the same strategy, but I set up one new portfolio, and I started a new account to actually do this so that I can track it specifically. So I started this new account, and up till now, basically, it is only less than a year with this new portfolio, and basically the returns which I generate using this strategy is within less than a year, almost a year, I would say, almost a year. Basically, I'm looking at about 50% returns, and the cash flows from this portfolio is sufficient to pay two kids for private school. So that is taken care of. I'm not spending any additional. I'm not putting in any additional money for their education. I am just using this portfolio to run the cash flows. So then, of course, this strategy works, and I am putting it on to other things which I do, which is in my life right now, lah. So the next thing is I'm going to target this. If you look at this picture here, so I'm going to do a debt-free challenge. Okay, of course, a lot of people have a lot of debts, a lot of loans. I'm sure everybody have loans. And you know, there are a lot of people who have loans, and at the same time they have money, but they have loan. And why is this? Because they borrow money from the bank, they have cash, but they still want to borrow. They don't want to pay the bank, so they borrow, say in this example, 250,000 from the bank. At the same time, they have 250,000 cash. They say this is normally on the housing loans, the flexi loans. So it said, I don't want to pay off the bank, because once I pay off the bank, I lose this flexibility. Once I pay off the bank, I lose this flexibility in case I need the cash. So I had this mindset. I had this mindset for the past 15 or 20 years, because this house which I'm staying right now, I actually bought it maybe about 18, 19 years ago. And this loan existed I think about at least, yeah, about 18, 19 lah, yeah, because last time when we started to work, you can actually borrow for 35 years. So about this loan existed 18, 19 years ago, and I had cash, maybe not all mine lah, some of it maybe my wife's cash lah. So we had cash, and we were parking our money in this bank account for the past at least 15 to 16 years lah. I mean, before that we were just paying the installments because we don't have a lot of money. But when we started to get more money, we started to save and accumulate. So this account, I would say, at least for 15 years, we had zero balance. We had zero balance in this account for at least 15 years, which is this $250,000. So it was kept in the bank for 15 years, 250,000 to offset the loan. Yet we don't want to pay it because we thought one day we would need the money. We never need the money. We never need the money, but we thought one day we need the money. So we never paid off the loan. So it was there. And I know that outside there are a lot of people who do this. There are a lot of people who do this. And let me tell you, this thing is going to, if you don't realize it quick, I mean, if you don't realize it quick, this thing is actually going to set you back financially by a lot. Because if you know the secret, how to actually look at this on a different perspective and manage it, this loan, you can actually pay it off within 3 to 4 years. You can actually generate income. You can actually generate income within 3 or 4 years with the same 250,000 you have in the account. Same. And it won't cost you anything extra. And let me show you. Okay. What it is that when you put money in the bank, they charge you interest, right? They charge you interest. So what they charge you is in this account, because it was an old loan account, the interest for me is 5.5%. Today the interest might be lower. Today the interest might be 3.5%, no more than 3.5% if you take a new loan. But this loan for me, the cost is 5.5%. So a year of 250,000, 5.5% would cost $13,750 of interest. So my cost of interest is 13,750, and my opportunity cost to park this 250,000 to offset the interest to get zero is 5.5%, right? Is okay. You don't need to be an accountant to know that lah. you can see that. So the opportunity cost is for me is $250,000. My opportunity cost $250,000 against what? 13,750. I think I'm a very bad a very bad accountant for me personally lah. I mean, if it was the company, if it was the company, I would tell the company, go take this money and generate more returns instead of parking it in the bank to get an interest of 3%. As a CFO of the company, I already did that. Okay, but as my personal CFO, I didn't do it for the past 10 or 15 years, you see. So I said accountants are very bad in managing their own money. So then what happened? Of course, your opportunity cost is 250,000 to save $13,750. So then it comes to how can you actually rectify this? The answer is very simple. You go and find something which can generate you with this 250,000, which can generate you more than 5.5% interest. More than 5.5% interest. If you can generate anything more than 5.5% interest, you would already be better off putting your money in the bank to offset interest. Okay. So then, of course, you can check out what give you better return than 5.5%. Yeah, it can be property, it can be mutual funds, it can be anything. But for me, because I am a trader, I'm going to actually take this money out without my wife's knowledge, because that's not not all my money. It's a joint account, okay? So, but I have control of it. So I'm going to take the money out. So I'm going to take the money out. In fact, I've already taken it out. Started to take it out a week plus ago, and I'm going to take the money out, and I'm going to put it to better use, to generate more than 5.5% interest. Okay. So what I do is I use the same model, the same strategy, and the same model which I use to do my children's education fund, the education fund portfolio, which I say I put one sum in, and I don't have to pay, I don't have to put anything more than that to generate cash flow for the next 10 years for their education. So I'm going to use the same strategy, same model to actually attack this portfolio which I've wasted more than 15 years putting my money there. So then what I used to do is basically the strategy which I use would generate a return of 2% a month without fail, yeah, because it is actually one of the best option trading strategy. Low risk. Of course, the returns are also not that great, but 2% is actually a lot lah. You put your money in the bank, you only get it within a year, you get 2%. But with a trading system and using option strategy, basically I generate 2% returns a month. Okay, and with 2% a month, you're generating 24% a year. So if you generate 24% a year, that means you generate 60,000 of cash flow a year. So when you generate 60,000 of cash flow a year, less of the cost, because once you take the money from the bank, you have to actually pay 200, sorry, you have to actually pay 5.5% interest. So you have to pay the $13,750 of interest. So you pay the interest 13,750. You have a cash flow of 60,000. Do the math. Do the math. Minus it. At the end of the day, you will get a net return of 46,250. Isn't that great? Isn't that great? If I knew this, if I knew, if I knew this earlier, 10 or 15 years ago, can you imagine, 1 year you generate $46,000 net income, with the same cash which you had there for the past 15 years. You multiply by 10, you are going to have 460,000. You multiply by 15, you're going to have 600,000. And we're not even talking about compounding. Yeah. So basically, this is what is going to do. This challenge have already started, and we are going to actually perform it this way. Yeah, you follow me on this, huh? Okay. So on the first year, basically we are talking about generating a net cash flow, net income of $46,250 on the first year. And then your principal outstanding, you still have $250,000. You still owe the bank 250, but you take your money into an income generation portfolio, income generation. You generate cash, 2% a month, which is 24% less of your interest. Net, you get 18.5. So the first year you end up with 296,000. Okay, and then liability 250. The second year, you have more cash. You have 296,000. You put it as in the same portfolio with the same strategy. You generate another net 18.5%. You have 351,000 at the end of the second year. Your liability to the bank is still 250,000. You are still paying the bank how much was that? 13,750, right? You're still paying the bank 13,750. No change there. But you now have 351,000 cash. And on the third year, you do the same. You end up with 416,000. You still owe the bank 250,000. And on the fourth year, you have 492,000. Okay, and on the fourth year, you become debt free. Okay, you tell the bank, okay, I don't need this anymore. I have already used the same 250,000 which I parked to your bank, which for the past 15 years, because I don't know how to manage it. And now today I'm going to cancel off your loan. We write a check and pay the bank $250,000 on the fourth year. And after you pay the bank, what's more important is after you pay the bank, what is left in your bank account? What is left in your bank account? Yeah, any guess? Any guess? Any guess? You are still practically left with $250,000, but your liability is zero. Your liability is zero. Your liability is zero. Okay, and of course, on the year 5 itself already, you can use back this $250,000 to generate additional income. Of course, lower because you have used it to pay the bank already. Yeah, but the difference is that you do not have any liability anymore. Yeah, you are already debt free on year 5. Of course, I'm only showing you on a very conservative basis of 2%. And remember earlier, I was saying that when I did the test portfolio, I set up a new portfolio, doing it for my children's education. Within the year, basically, that portfolio using the same strategy was already generating a return of up to June of 11 months, it was about 56% return using the same strategy, which I've told you. So of course, if the expected return is double of what I've shown you here, of course the timeline to actually cut short the timeline is like going to be cut short. Instead of doing in 4 years, you can actually achieve it in 3 years or 2 years. But let's not go there. If you can use the cash which you have right now and do it in a different way to generate cash for you, wouldn't it be good if within 3 or 4 years, with the same resources which you have, and you become debt free? I think this is extremely good. I mean, this is extremely good. And if I was not applying it in the past, I that's why I said it is a big financial loss for me for many years. More than 15 years, I have actually wasted resources by not understanding how to actually manage my personal wealth in the correct way. But of course, it is okay because now that I know how to do it, I actually accelerate my path very much early, faster. I mean, I accelerate my financial plan faster. In fact, I'm already starting to have plans to use this kind of strategy, to buy properties, In fact, because of the MCO and all the home ownership campaigns around, I also shop for. We also bought a new property, and of course, when we buy new property, the wife is saying, "Want to buy? You already have so many houses, or still want to buy?" I said, "No problem. It's funded one. All this can be funded. You just buy, because right now home ownership campaign is up to 31st December this year because of COVID. You don't need to pay anything. You don't need to pay any down payments. You just need to sign the SMP. The developer would pay for you the 10% down payment because they give you a discount. So basically, from now until 3 or 4 years, you don't need to pay any money to buy a property." Okay, and of course, this is the best time lah. This is the best time to actually invest. But make sure when you invest at the end, at the 4th year, you have the money to start to pay for the installments lah. But for me, if I buy a 500,000 property, I buy a 500,000 property, and I set aside a portfolio, maybe I put 200 or 300,000 in this portfolio, and I start to generate income right from today, with the same strategy, with the same very simple strategy, 2% a month, 24% a year. By the 4th or 5th year, when the property is completed, depending on how much your property costs, mine is not that expensive, so by the 4th or 5th year, when the property is completed, you would already generated the income to pay off that property itself. But of course, the catch is you need to have the capital to start with. That's the catch. You need to have the capital to start with, but you have to you use this capital properly. I mean, don't put in the bank and save 5.5% interest. No more. Use your capital wisely. And where you can actually get capital, okay? A lot of the time people say, "I don't have money." Actually, it's not right lah. I mean, you have a lot of money. Everybody, I would say, if you have worked 10 to 15 years, there would be bound to be money somewhere, okay? And where you can actually find money, one thing is evaluate your portfolios. Evaluate if you have a flexi loan, if you're keeping money in the bank, generating very low return, swap it to generate to an investment or a trading or something that generates you more returns than that. Okay, if you have mutual funds, and you feel that mutual funds is not generating sufficient, in fact losing money, I also have mutual funds. A lot of mutual funds, in fact. Yeah. But for me, because I'm already old, so I actually split my investments to various type of investments. I have investments generating 6% return in mostly REITs. I have mutual funds. Mutual funds basically basically you are generating, I would say between six or seven is at the lowest expected, and maybe if it's a good year you can do 10 to 15 lah. But I would say generally don't expect anything more than 10 lah, mutual funds on the long term basis lah. Yeah, so I spread out because I cannot how to say, I spread out my investments lah. And of course, property itself, if you have property, you rent it out, you basically get 3 to 6% returns. Most of the time, property, a lot of people only generate 3% return nowadays lah, because property overhang. If you want to earn cash flows from property, it's not there lah. It's not there lah. If you buy to invest on the asset for long term, it's okay. It's still okay. But if you buy thinking that you will generate from cash flows, that generate cash flows to pay off for the loan, I advise you not to lah, because I also had this experience, and it doesn't. Most of the time, it doesn't work lah. A lot of people, maybe some work for some, but for me, it doesn't work. It didn't work for me. Yeah. So where you can find money? So these are the places where you actually can find money, evaluate what you have, what kind of portfolio, if it is generating good returns for you. If not, then you find other ways that can generate you more returns, so that you can actually build up your wealth. And the other one is, of course, these are for the higher earners lah. I mean, especially professionals lah. If you are a professional and if you have worked 20 to 25 years, if you are professional, you have worked 20 to 25 years, definitely in your EPF account, your EPF, your employee provident fund, you would have saved more than a million ringgit in your EPF account. And I don't know if you know that EPF, if you have the account more than 1 million ringgit lah. If your account is more than 1 million ringgit, you can withdraw it within 3 days. You can withdraw anything above 1 million within 3 days. The money is in your bank account. Yeah. So that there is a scheme where you can actually do this. You don't need to go through those lestari lah, all these kind of things lah. But only for those who have such a big EPF account. So why I say you can actually withdraw it? Of course, there are give and take. Of course, you say you withdraw it, and then what if you get old? You don't have money and all these kind of things. You get old when you get old lah. Worst thing is you get old, you look at your EPF account and you see so little money. That is the worst thing. So don't worry. If you know of a way which is safe, I would say safe. Please do it safely lah. Please don't simply go and invest in all type of schemes and all this stuff. Please do it safely. Do in something which you are comfortable, which is safe. So then what happened is that EPF, you take the money out. In fact, I also took some out. Why? Because EPF is only giving the last return which they give is 5.2%. 5.2%. Yeah. So the last return they gave was 5.2%. This year's dividend. And of course, if you say 5.2%, if I apply the same one in my income generation secret framework, which is the framework I use personally, which I am right now going to train people. I'm right now going to train people to utilize the same framework which I use to generate income on a monthly basis, to help them achieve this kind of return in a safe manner, and also not spending a lot of time basically to manage all this portfolio, because they give so little return, right? Because they give so little return of 2% a month, right? I only spend 20 to 30 minutes a month managing this kind of portfolio. I mean, the cash flows are good, but basically, I only spend 20 to 30 minutes a month managing this kind of portfolios, as opposed to my other trading strategies, which I spend more time, because those type of trading I would say active trading strategies. Those type of active trading strategies, basically the expected returns would be between 8 to 15% a month. 8 to 15% a month. Yeah. So different type of strategy for different people. I would say for those people who are actually starting out to learn about investment, to learn about trading, start on a very simple strategy first, like the income generation secrets framework, which I'm training people to do right now. Start with a very basic strategy first, and subsequent to that, if you are keen to learn more, you can actually move on to the more advanced strategies where you can actually generate better returns. Maybe I'll just show you to show you something which just, I mean, is late already. I won't spend too much of the time. I'll just finish up with the broker account which I've actually opened, just to show you that I've actually started this thing here. Oops. Okay. Just a sec. What's happening? Okay, I don't know if you can see this. I don't know if you can see this, but what this is one of my broker account. I have a lot, because what I do is I trade different type of strategy. I want to actually use different strategies for different purpose, so that the purpose is allocated lah. Like this one, I set it up for my debt free 15 year, no, I mean the 250,000 which I had at the bank. So this one I want to set it up as a debt-free account. So I set up one account to do this debt-free challenge. I have another account which I do for the education fund. So that is another account. And I have investment. I have active trading accounts. Not in one broker. I have 3 brokers, each with different kind of strategy. So when you're more advanced, then of course you start to have all these, but if you are starting, it doesn't matter. So what I wanted to show you here is that I've actually started this, and if I don't know if you can see this, it's a bit smaller, but what it is that in this account, currently there is 20. Before that there was 5,000 US dollar in this account. I've just transferred last week and this week another 20,000 in. And last Friday, I've actually started to trade on this strategy last Friday, and basically, if you can see here, there is two options here. One is this option PLTR. One is YUMC. Yeah, YUMC is KFC lah. KFC listed in US. So what I did was I sold a put option. I sold a put option. And if you look at here, I generated income of $109 for YUMC, and then I generated income of $72 for this stock called PLTR. Okay, and I have two units. So basically, I've generated 140 US dollar for this PLTR, and I generated 100 for YUMC. and all in, if you add both, is $240. $240. And the capital which I needed to generate this income, this $240 or $250, is actually how much is this? 10,000. Why about 10,000? Why 10,000 is because YAMC, the stock price is $6,250. $6,250. I have one lot, and then this PLTR, it is $21. I sold a put at $21, which means my capital which I needed to do this is $2,100 per unit. So I have two. So what it works out is $4,200 plus this 6,250. That means it is 10,450, right? Math's very bad. Yeah, slightly above 10,000 lah. Okay, slightly above 10,000. And basically the return which I've told you here, the income which I generated is 250. So if you take 250, and this is actually for a period of up till 20th of August. That means the expiry of this is up to 20th of August, which is about 40 days lah. 40 days lah. So I've generated $250 on a capital of 10,000, which basically 2.5%. 2.5% return for 40 days. So that's why I use around, the target is about 2% a month. So I have used 10,000 of capital to generate $250 of cash flow every month. Yeah, which works out to about 2.5%. So if you put the same money in the bank, they will give this to you in a year. They will give this to you in a year. But if you know how to use this capital to in the right place at the right time and on the right instrument, which for me is options, yeah, you can actually exponential your return. Instead of waiting 1 year to get 2%, you can do it in 1 month. Yeah. So this is basically the power, and I have used this after going through it many years and testing what works and what not work. So basically, this is the framework which I felt is the safest framework and basically most consistent also for me. Lower return is okay because I use this for specific purpose. Education fund. This one is for debt-free. And of course, later I can actually start up another one with the profits I made from the trading to actually set up another portfolio which actually can do the property portfolio. I remember I bought a house. Yeah. So this is the thing which you can do. Of course, you need to learn this. And basically for me, I've actually developed a training and a course. It is almost done. I mean, I want it to be good. Actually, I've launched it earlier. I'm refining it. I'm going to relaunch the course. The training with this system is called the Income Generation Secrets Framework. It's called the Income Generation Secrets Framework. And I have, if you look at that thing scrolling down there, it is actually the link where you can actually register your interest. Where you can, when it is launched, I will just inform you that it's going to launch. You can check it out. And I want to put this out to as many people as possible so that they too can look at their financials and don't make the mistakes which I did for the past 10 to 15 years. Yeah, because this can really cost you a lot of money and can haunt you, like it haunted me when I turned 40. You see. Yeah. So the other resources which you can have is my Facebook page. You can actually go there you can connect with me. You can actually learn some of the things which I put there. And on top of that, I am also doing a weekly newsletter. A weekly newsletter, which basically I write a lot of things on, not only on trading, a lot of things on experience and life lah. I mean, basically my experience and how I've actually gone through life, and I try to actually put perspective in that, so that people can actually understand, and if they relate, then of course it's good that I can help them in one way or another. So that newsletter, you can actually subscribe the newsletter. Currently, it's free. I'm giving it out for free, and I put a lot of contents. If you are already trading, there are a lot of trading technical write-ups which I put there, which was all the things which I learned during my many years of trading the stock market using options. So you can also learn a lot of things from there if you're trading. If you are not trading, you can also read on the live, and probably I hope that you can pick up to learn trading and investment through my newsletter. You can subscribe here. It's free. And it will be sent every Monday morning at 9:30. Yeah. So currently it's actually running at issue number 19, if not mistaken. Yeah. So there are also a lot of back issues where you can actually read. So you can go and check it out. So okay, I mean, I hope I'm not taking. I've actually overrun my time. I will overrun my time. But anyway, I am very happy for those people who have actually joined. Joe Lau. Who is this? No, CYL. CYL is my wife. Don't tell her I took her money. Okay. So yeah, thank you for attending this week's Traders Talk. And we have this every week 7:30. I make it a point that every week I will actually share with you some experience, so that you can actually learn from it. Yeah. And then if you are looking to learn trading and investment, you can actually connect with me through my Facebook page, or you can message me. Yeah. Okay. So thank you so much for those who have joined. I see a lot of people who have actually joined from the start for this almost 1.5 hour. Thank you so much, and I wish you a good night, and hope everyone is safe, and I catch up with you in the next week's Traders Talk. Yeah, 7:30 p.m. on Tuesday. Yeah, see you. Bye bye.